Hello everyone, thank you so much for joining us today. My name is Nicola Probyn. I am co-founder and director of the Africa Scotland Business Network. Thanks again for joining us. I have no doubt that this is going to be an hour and a half of your time very well invested. So today is the last of our three-part webinar series that we've been running in conjunction with network members and our partners in the series, the First Rank Group and Trade Law Chambers. So just a huge thank you to the teams. They've been incredible in terms of their support and generosity in terms of sharing their knowledge and insights, and of course their time. So thank you to the team, David and Etienne at First Rank Group, and Neil and Rian at Trade Law Chambers. So today we are very lucky to have an amazing selection of speakers who are joining us today. So we are going to go through this fairly quickly because we've only got an hour and a half. So how the session will run is I'm going to do a quick introduction, then I'm going to hand over to my business partner and co-founder of the network, Claire Alexander. She's going to give you a very high level view of what the network is and what we do, because we've got some people who are new to the network today. And then we're going to run a very quick poll. So these polls we find are really useful in understanding what your needs are, so we can follow up with you afterwards if needs be. And then we're going to go straight into our speakers. They're going to be introducing themselves, and they have only 6 minutes each, but we are going to be doing a Q&A afterwards. So if you have questions as the speakers are going along, please pop them in the Q&A box at the bottom of your screen, or just make note of them. So I am going to move on. So today we are unpacking, as I said, this is the last in our webinar series around unlocking Africa's potential. And today is around establishing a connection in Africa. So we know from feedback from our members and our wider community that so many people are looking to expand into Africa, looking for new opportunities, but it's really about where do they start, understanding the landscape, establishing trusted connections, and a go-to point. So this is what we're hoping to relay to you today. It's just scratching the surface. So by all means, if you'd like to connect with any of the speakers after the session, just get in touch with us, someone in the team, and we'll make that connection for you very happily. So our guest speakers today, we've got from the RMB and FMB teams, they're in-country representatives from Kenya, Zambia, Botswana, Mozambique, Tanzania, Ghana, Namibia, Nigeria, and then of course the team from Trade Law Chambers. So it's going to be a bumper session. Before we go into the speaker slots and the poll, I'm going to hand over to Claire Alexander, who's going to very quickly tell you about the Africa Scotland Business Network. Thank you, Claire.
Thanks very much, Nicola, and a warm welcome to you all from Africa Scotland Business Network here in Cape Town. We actually have a rather large storm going over us right now. It's not often you see a Scottish girl in South Africa in springtime with her Harris tweed on. So my name's Claire Alexander. I'm one of the 10 founding members of Africa Scotland Business Network. I'm one of the 3 directors and certainly one of the drivers of the network. So today you are in part 3 of an event series on finance, trade law and tax in Africa. We have actually had a really brilliant return rate of about 65% of participants who have joined us for all 3 webinars. So we'll definitely take that as a wee compliment that our content is relevant and useful to you out there. We actually created these events out of demand from our members and wider business community. And we did that in partnership with our members First Rank Group. And of course, an extra thanks to Bowman's Law Firm and Trade Law Chambers, who you will hear from later on today, both members of ASBN, for taking part in this event series. Now, although this is the last in this particular event group, if there's a topic that you would like ASBN to cover, we will gladly create the event and make the speakers available from our membership base, all you need to do is let us know. So we've got a lot to get through today, and you're probably eager to listen to the speakers that we have from across the African continent today. How exciting. But very quickly, to introduce ASBN, we are a private sector business network. We're managed from South Africa, but at the rate that we are growing, we are going to have to anchor our brand in other key markets in Africa very shortly. And I guess our very quick success and the beauty of ASBN is our diversity and our progressive approach to building a representative business network from African soil. Now, we have members from 26 different sectors. They range from startups, SMMEs, and African and global corporates. We offer members lots of value, which is outlined on our website. And we also offer trusted business connections and opportunities. Now, being in 8 countries right now, we can help our members reach into different nations with that good old-fashioned common ground on their side. Now, of course, ASBN exists on behalf of members for predominantly commercial purposes, but we do like to act like a thinking partner by understanding our members' acute business needs. And only last week, we were delighted to hear of the news after connecting one of our NGO members here in South Africa. They are a digital crowdfunding platform called Phoenix. They provide bursaries for more impoverished South African students and refugees. They help them get through university. We connected them with our other members, which is also a digital company in Edinburgh. They provide business tech ed services. Now, although our members can connect across the network at any time, sometimes it's our job as network managers to think out loud and say, you know what, you really should connect with this company because we can see your synergies. And after doing that between Phoenix and TriCrest have actually employed one of the student beneficiaries of Phoenix as their social media virtual assistant. Now, why is this important? Because for most or many South African students to be working internationally, that will only remain a dream. So we wish Lunga all the very, very best in his new international position in Edinburgh. I'm sure Scotland's going to treat him very well. So please do stay in touch with us. We're a super friendly and hardworking team. We are across all the socials. We are constantly churning out news and views on LinkedIn. And if you would like to get to know us or our work in a little bit more detail, please feel free to get in touch with us anytime. Thanks so much.
Thank you, Claire. Before I hand over to the speakers, as I mentioned, we're going to do a very quick poll, which is going to pop up on your screen in 2 seconds. And just click on the options that relate to yourself and your circumstances. Danny, if you could launch the poll, that would be fab. Thank you. So you just click on whichever ones are relevant to yourself, and then we can get started. That would be great. Just give you a little bit longer. Okay, I think give another couple of seconds and then we will get started. Okay, I think we're going to hand over to the speakers now, just because we have people dialing in from all over Africa. We're hoping that technology is on our side today, but if for some reason one of the speakers is not able to join us, everyone's online and ready at the moment. So let's keep hoping that everyone's connections stay as they should. Okay, thank you, John. I will hand over to you now.
Thanks very much, Nicola. Hello, everyone. Hamjambo wote na karibuni. My name is John Juguna, and I am a transactor at Rand Merchant Bank in the Rest of Africa Debt and Trade Solutions team based in Nairobi, Kenya, where we have a representative office under the First Rand banner, looking at investment activity across East Africa, from which we, as a bank, lend on a cross-border basis. Allow me just to take a few minutes to just give you a quick overview on Kenya and its economic drivers. As I'm sure most of us know, Kenya is the largest economy in East Africa in terms of GDP size, and also serves as the regional financial and transportation hub, connecting the various landlocked countries of East and South markets. That being said, to run a trade deficit, predominantly relying on the markets of Asia and the Middle East for the supply of capital goods as well as petroleum products. On the other hand, our main exports are tea, horticultural products, and coffee to the markets of Europe and Middle East. So essentially, this slide just gives you a snapshot of just a key snapshot of the various macro factors and Kenya's position, Kenya's location on the larger African continent. As can be seen on the next slide, our economic growth prior to 2020 had been robust, growing at an average of 5.5% in the last 4 years, which is reflective of a resilient economy that has stood various domestic and external shocks over the same period, and also one that's being driven by strong investment as well as consumption. So the economy is reasonably well diversified, although most of the employment depends on the agricultural sector. Other key contributors on the industrial side include manufacturing, transport and logistics, real estate, as well as the trade sector. GDP growth prospects in the current year, 2020, have dampened due to a slowdown in economic activity as a result of the pandemic, which has also weighed down heavily on the major contributors to GDP growth. However, the outlook remains positive, and the GDP growth is expected to rebound sharply in 2021 onwards, with the easing of the pandemic and subsequent opening up of the domestic economy and resumption of international trade. My next slide, it was just an attempt to give you a sense of the major initiatives currently underway in order to stimulate economic growth over the medium-term horizon. So as can be seen, these are heavily predicated on infrastructure development and investment, particularly in the areas of transport, energy, and real estate, which are being scaled up and fast-tracked. And are also reflective of some of the opportunities, nascent opportunities that investors are seeing in the market in the context of a large growing consumer market. Another major pull factor for investments currently includes the Big Four agenda, which essentially is an economic blueprint that has been developed and adopted by the current government to try and stimulate economic development over the short to medium term horizon, and at the same time aid in alleviating some of the socioeconomic challenges that continue to face Kenya. So this is mainly from an employment perspective, food security, healthcare, as well as housing. And I'll just delve into each one briefly. So under the manufacturing pillar, the intention here is to enhance the local manufacturing capacity, industry capacity and output. And as I said, also to create employment opportunities, and also in terms of arresting the attendant trade deficit. So there are several initiatives underway to boost local manufacturing capacity in the sector, to boost the manufacturing sector. And some of these include the creation of zones, which provide, should they wish to set up yes. And the universal health, giving universal investments in healthcare facilities, the cost. The housing pillar to provide low-income housing, and at the same time expand as well as on affordability. It's also in the context of creating a captive demand for the construction industry, construction and real estate industry.
I think, unfortunately, we've lost John. Sorry, John, we actually can't hear you at the moment. So I think we're going to just move on to the next speaker, unfortunately, and hopefully your connection will get better towards the end and we can jump back on with you. Okay, apologies for that. Okay, so next up is Luanga from Zambia.
Okay, good afternoon, everybody. So my name is Luyanga Mfungulwa. I look after corporate banking for FNB Zambia. So unlike some of the other countries, we don't have the different brand pillars represented separately as RMB, FNB, and so on and so forth. So First Rand obviously owns the business, and we are operating under the FNB brand in Zambia. So I sit in the corporate and investment banking side of the business. Just to give you a bit of an overview in terms of where Zambia is right now. So we obviously have a population of about 18.3 million Zambians. And I think the beauty about that is about 65% of our current population is under the age of 25. Our primary export is largely copper, between 70 and 80% of export earnings actually are generated from copper exports. The main destination of our copper, which is largely in the form of copper cathodes, is China. We also have a very strong relationship with South Africa. and obviously being part of a wider South African bank, I think that helps in the sense that we are heavily reliant on the SA corridor with all of the clients that we actually service. In terms of GDP, the size of our economy is about $27.3 billion. Per capita, we are at $1,500. Inflation over the last 4 months has been ticking downwards, although it's still relatively high at 15.5%. Our currency has been under a lot of pressure over the last 2 years or so, because we are an import-oriented, largely import-oriented country, landlocked. We do get to see that when the currency weakens, the pass-through effects then filter into our local currency, into our inflation. Our monetary policy rate, which is regulated by the central bank, is currently sitting at 8%. And you can actually earn a return in local currency terms if you invest in our one-year treasury bills at 24.5%. One of the other advantages that I think we have as a country is that our exchange rate regime is largely free-floating, so we do not have any exchange controls. We are currently experiencing a few challenges around liquidity, but that's because there's been some changes from a tax from the tax perspective, which I mentioned that the mining entities are our largest, or copper is our largest export earner. So the mining entities are now being asked by government to pay their taxes in dollars, which has had an impact on liquidity. The market is quite rudimentary. The foreign exchange market is quite rudimentary, although we are seeing it becoming a bit more sophisticated. So largely spot transactions, I think 95% of all foreign exchange transactions are spot. We do have pockets of clients that are transacting via forwards, swaps, and even options. In terms of external debt, I think that's something that's quite topical. I think at the moment when you talk about Zambia, most people actually think of debt. Our external debt levels are about 11.2 billion dollars. Domestic debt at about 5.25 billion. So Zambia has not been spared by COVID-19. I think we have seen the economy being significantly impacted. In terms of where we're currently sitting, we've recorded, I think now the numbers are close to 10,000 cases. We've seen a good number of recoveries, but we also have recorded at least a decent number of recoveries. We have also seen a number of deaths. We haven't had a full lockdown or a hard lockdown, but we have instituted a partial lockdown, which largely focuses on social distancing, sanitizing, checking temperatures, and so on and so forth. So as a result of the pandemic, GDP forecast for 2020 has been revised downwards. We're actually projecting a recession for the first time in 20 years to 4.6%. Next year, we do expect to see a bit of recovery, rising to about 1.4%. And the hardest hit sectors, tourism and hospitality. We have seen a bit of growth in sectors such as health, tech, as well as FMCG. In response to this, the government has also put up a relief package, about 10 billion kwacha, just to help businesses with relief that will allow them to at least survive through this trying period. We have also seen at least another positive from copper production. There are a few challenges between government and the mines, some of the mines, but that's something that's being resolved. We're hoping that that can be resolved soon. But we have seen copper production increase by about 5% year on year from what we were able to produce last year. So we're quite hopeful that the trend will continue. So from a Zambia perspective, that's pretty much what we are seeing. I know the story isn't great at the moment, but we do expect that next year is an election year. We should see some stability on the currency side. We should start to see the stability on the interest rate side as well as inflation. So I still think that Zambia is a pretty attractive investment destination. And we're always happy to help our customers to navigate the challenging economic environment and support them with their ventures into Zambia. So that's my presentation. Thank you.
Thank you so much. Now we're going on to Bayela Corrigan from FNB in Botswana.
Thank you so much, Nicola. Next slide, please. Good afternoon, ladies and gentlemen. Thank you so much for having us this afternoon. My name is Bayela Corrigan, and I look after the Foreign Exchange Product House for FNB Botswana. As Luanga has intimated, we operate under both the FNB brands as well as the RMB brands, and we are essentially a core part of the First Rand family. Just a little bit of context around FNB in Botswana. We are the largest bank in the market, and we have the largest market cap. We currently have a footprint of 24 branches throughout our country, and we are both the leading FX exchange and trade bank in the country. In terms of a little bit of insight around Botswana as a country and as a nation, we are a landlocked state in the middle of Southern Africa. We're bordered by South Africa, Namibia, Zambia, as well as Zimbabwe. And in terms of what we look like from a macroeconomic standpoint, we are quite a small country in terms of population size. We have about 2.3 million people. However, we have a GDP per capita of about 7.8 thousand US dollars, which is quite significant given our tiny population. As a nation, it is our aspiration to one day become a middle income nation. We hope to ultimately achieve a per capita GDP of 12,000 US dollars, and we seek to achieve this by 2036. In terms of our GDP, as I intimated, we are a small nation, but we do quite well. We have a GDP of 38.9 billion US dollars. We are a mineral-led economy driven primarily by diamond exports. Diamonds actually form 91% of our exports as a nation, and the primary destination there is Belgium. From a political standpoint, we are a very politically stable country with a very sound legal system, and a lot of the stability in our country has really led to our economic success. Diamonds were discovered in Botswana in 1966 and have been a staple for driving our economic growth and leading to our prosperity to date. We also export other commodities, and obviously this includes things like gold, copper, minerals, soda ash. We deem ourselves to be a very hospitable investment climate. Botswana actually has no exchange controls. We have a very stable currency, the Botswana Pula. It is linked, we have a crawling peg. So we are linked 45% to the South African Rand and 55% to the Special Drawings Reserve. In essence, sort of 80% of Pula dollar volatility can be attributable to movements in the Rand, and you can almost sort of perfectly track the movements in dollar Rand versus dollar Pula. From a tax regime perspective, we are deemed to be one of the lowest tax environments on the continent. For certain economic zones, we have got preferential tax rates, namely in the manufacturing and international financial services company, we have a tax rate of 50%. For other companies, namely corporate tax is at 22%, and our individual tax is at 25%. As a whole, we have relatively good infrastructure, a very solid road network throughout our country to all our neighboring countries. We have 4 main international airports. Next slide, please, Nicola. As I had intimated earlier on, sort of 2 primary drivers in our economy are obviously the diamond and the tourism industry. And as a result of the impact of COVID-19, we have seen our forecast for GDP be revised. Like many of our counterparts in this discussion, we've seen that the depression in the sales of diamonds in particular has meant that our expectations for this year's GDP have come down quite significantly. Overall, we are expecting GDP to hover around negative 10.5% for the current year. We continue to expect negative GDP going ahead. As both tourism and mining are primary drivers of the economy, we only really expect to see real recovery towards the end of 2021, and we expect to rebound at about 4.5% 4.5% in the next financial year. From an inflationary standpoint, our inflation target range for Botswana is between 3 and 6%. We are currently well below our inflation range at 0.9%. The current pressures are quite muted in our market. From a bank rate perspective, our current bank rate currently sits at about 4.25%. The prime lending rate in Botswana is currently sitting at 5.75%. Next slide, please. Right, and then this is really just to illustrate to you what our growth has really looked like over the last couple of years. Our growth levels aren't as significantly high and don't sit in the teens, but we have been able to demonstrate very stable growth over the last couple of years. And as I've already intimated, a lot of the depression that you are seeing happening in this current financial year is really due to the fact that the diamond industry has taken quite a big knock, and this is a big driver of our exports as well as our revenue. Further, we do expect to see a reduction in our SACU receipts in the current financial year. Next slide, please. I think in this slide, we really are just speaking to the government revenues and our fiscal position. Botswana has a very sort of prudent risk management approach, or a very prudent fiscal approach to managing our revenues. You will note that our debt to GDP ratios are quite low at 13.5%. We do take a very conservative approach to managing the fiscus. Given the challenges we have experienced with COVID-19, we are likely to run a deficit both in this current year of about 10% as well as in the next year. However, we then expect to return back to a surplus in the subsequent years. From a credit rating standpoint, for the longest time, we've had the highest credit rating on the continent. However, in the recent past, as early as March of this year, Standard & Poor's lowered our long-term rating on both our domestic and foreign bonds from A- to BBB+. However, the outlook for the economy is very stable. One of the things that is very important to highlight is that we have predominantly been a sort of mineral-led, public sector-driven economy. Government is aggressively pursuing diversification efforts through the introduction of special economic zones to drive diversification in our economy. And I'll talk to you a little bit around that towards the end of this presentation. I've already talked to you about our foreign currency and just really spoken to you about the stability of our currency. In terms of the crawling peg, it is important to note that our crawling peg was most recently adjusted, depreciated by about 1.5%. So in essence, you can expect that the pula towards the end of this year will be about 2.87% lower than what it was at the beginning of the year. But generally, we run a very stable currency. In terms of key industries and priority sectors, as I've intimated, government is working quite aggressively to diversify the economy. We have launched a stimulus package, and that will be to the tune of approximately 20 billion pula, so roughly $2 billion. And the primary sectors that we are focusing on as a nation are predominantly mining, being resource-led again. We are also looking at things in mineral beneficiation, as well as education and agriculture, health and automobiles. Although we might be a very small country with a small population, we are part of the Southern African Development Community, which does give us access to 15 countries with a combined GDP of more than $725 billion. So we are aptly placed for anyone looking to invest, particularly those looking to invest in financial services. We do create a very warm and hospitable investment climate. In a nutshell, that is Botswana. We are very much open for business, and if you have any other questions or queries, please do not hesitate to reach out to us. Nicola, I think that's essentially it from me. Thank you from Botswana.
Okay, thank you, Bayilin. Now we have the team from Mozambique joining us.
Good afternoon, ladies and gentlemen. And I'm the head of house in Mozambique. Thank you very much for being here and for having us in the webinar. So I'm going to give you a rundown of key aspects of Mozambique, or the aspects that you need to consider if you want to invest in Mozambique. Mozambique is a strategically located country in southern Africa. It is a conduit to global markets, so we give access to the landlocked countries in the neighboring countries, as well as to global markets in Asia and Europe and other countries. So we have a well-diversified economy. So our economy is from agriculture. It is also in the mining sector, energy and services. And we also have a very hospitable country that is Mozambique. And the growth of the country is expected to be good, or actually very good, with the GDP expectation of doubling what we have now, if not growing by 3 times. And that is supported by the oil or gas projects that are under development in the north of Mozambique. We have had a couple of setbacks in terms of GDP growth. That is mainly because of the scandal that happened in 2015 around hidden debt, or uncovering of a hidden debt. And the last one being the cyclone Idai and cyclone Kenneth that hit Mozambique last year. So our prospects of growth were actually revised last year after those cyclones, but we were on the road to recovery in 2020. However, with the outbreak of the COVID-19, which had a severe impact in the global supply chain and in the Mozambican economy as such, we saw our economy that had recovered by 1.68% in the beginning of the year for Q1 to contract by 3.25% in Q2. The expectation is that the economy is going to continue to be suffering in Q3, but the expectation is that going into 2021, there will be a recovery in our economy. So we have been struggling with a fiscal deficit that has been widening. It is expected to close the year at 125% of GDP. That is because of revenues fall and the weak tax revenue collection in the country, the depreciation of the local currency, as well as nearly all the government debt is dollar denominated. So public debt has increased significantly this year already, and is expected to widen with the impact of COVID-19 and also the increased instability up in the north with the insurgents security issue, or the security issues caused by the insurgents in the north of Mozambique. We have also a country that because of all the challenges it has been facing, the level of debt is has been growing exponentially. The credit to the economy as well has been significantly good and growing to support companies within the country or across the country. We have seen a growth between May and June of 2.9% in credit to economy. So we have also an inflation or annual inflation rate that has been on the increase, or the latest report of the inflation in Mozambique has been of an increase from a 2.6 to a 2.8%, and that is mainly driven to the increase in prices of food and beverages. Key interest rates in Mozambique have remained relatively stable. The central bank cut interest rates early in June just to try to accommodate the COVID pandemic, but the cut has been slowly felt into the economy just because of the upside risks that are still affecting our economy. Currently, the policy rate sits at 10.25%. And our prime lending rate as of August 1st is at 15.90%. We have had a depreciation of local currency, and that has been happening since the beginning of the year, and exacerbated by the COVID-19, whereby we are not seeing enough flows of foreign currency. One of the main provider or export provider sector of foreign currency into the country, which is the mining sector, has been suffering from or being negatively affected by the COVID-19, and therefore the exports have been reduced. And there is also maintenance in some of the key minings in the country that has compromised the level of exports that the country has. Also, the global demand that has been falling, or that has fallen in the beginning of the year, or actually during the whole semester, has also affected the level of exports into the country. We have, or from Mozambique to abroad, we have seen also a slight reduction in imports. However, the expectation is that is going to be picking up going into the Q3, or the third quarter of the year. From a political point of view, I think one of the main concerns from investors into Mozambique has been the instability or security issues in Mocimboa da Praia, in Cabo Delgado, which is where the big oil and gas projects are happening. So the oil and gas projects are mainly the ones that are going to anchor the economy of Mozambique. They are seen to be the ones that are going to take our GDP to a complete different level. However, these projects are located in Cabo Delgado, where we have this insurgent situation. However, what we have seen so far is that these attacks that are happening in Mocimboa da Praia are located into particularly this area, and are far from where the projects are. So the project will be, or are 70 kilometers from Mocimboa da Praia, which is the most unstable place of the province. The assets, the projects themselves have not been affected by any of the insurgents' attacks, and the expectation is that is going to continue. One of the operators has requested further protection around the project, and the government has also taken a significant contingent of people into that area to protect and to make sure that they maintain control of that area. The gas projects continue to, or will continue. There is no expectation of slowdown. The only slowdown that has happened in the projects is mostly related to COVID-19 and not to the insurgent attacks that are currently happening. So we expect that the government is going to be able to secure the 700 million meticais that they $700 million that they require to fight COVID-19. So they have secured so far from different partners such as the IMF, the World Bank, and other partners around 300 million meticais. $300 million. My apologies, the metical is the local currency in Mozambique. So we have secured almost $300 million to fight the pandemic of COVID-19. And the expectation is that the funds will continue to pour at a time where the numbers have grown or are growing significantly. From a regulatory perspective, I think Mozambique has been placed by the Global Competitiveness Report of last year as number 134 and 137 out of 141 countries due to the difficulty of doing business in Mozambique. However, we do advise all our investors, all potential investors into Mozambique, those who have interest in coming to Mozambique, to come. You just have to connect or to partner with the right partners. So our advice for those companies that are still setting up or would like to set up in Mozambique is to partner with a law firm, with a consultancy company, a local consultancy company, a local law firm that has an understanding of the local legislation, that has an understanding of the tax law in Mozambique, and how registration of companies and all the administrative issues related to registration of companies, and we do have a number of companies that we can advise, that we can actually refer all the companies coming into Mozambique to. Mozambique does have exchange control. However, it is not very difficult to navigate exchange control. FNB Mozambique does have a team of exchange control experts that can provide all the support that you require before you even bring your investment into Mozambique. So it's very important that before you bring your investment to Mozambique, before or after you registered your company, you do contact an expert in exchange control such as FNB, whereby you can get proper guidance in terms of the steps to take so that your investment will not be compromised. So what I would say is Mozambique is open for business. There is great potential for growth in the country. The biggest projects that are anchoring our economy, that are going to be the drivers of the growth in the country, are still going on. There is trust in the investors of those projects in terms of where the country is going, government willingness to allow the business to go smoothly. So I would say come to Mozambique because if the country is open for business. We are available to further discuss any details about the country, about the economy and the political situation. If you can contact anyone from FNB or RNB in Mozambique. Thank you very much. I'll stop here.
Thank you so much, Marta. Next up, we've got Sia from the team in Tanzania.
Good afternoon, everyone. My name is Sia Molel. I'm a Forex dealer in FNB Tanzania, which is a subsidiary of First Rank Group. So I will be taking you through our political, regulatory, and the economic part of Tanzania, and also I'll take you through the different opportunities that are available in country for investors. So in a nutshell, Tanzania, we have been growing so far with a GDP of between 5.7 to 7% for the last 5 years. Our inflation rate is at 3.3% now, and our currency has been fairly stable for quite some time. On the political and regulatory environment, so currently in country, we are on our election year. We're expecting to run for elections, have elections in October. And because of that, we expect there is a high probability of the current president who is currently on power to run to run and win the election. There has been quite stability on the political area because mostly from the time we got independence to currently, there have always been one party that has been winning all the election. So there's been quite stability when it comes to policies, frameworks and stuff like that. If we look at exchange controls, so Tanzania have actually minimal exchange controls comparing to, I can say, other countries in Africa. When it comes to fund repatriation, the only thing that should be required is that you just present documentations that shows the reason for the repatriation of funds. And if you have a foreign loan with any bank outside the country, you will have to register that with our central bank. If we look at corruption, so there have been quite a reduction in the number of corruption in the country for the last 5 years, given the current regime. There has been issues before, but most of those people were actually punished. So there have been a very huge reduction when it comes to corruption, and also the use of e-payment systems in the government, where now e-procurement and taxes are also done through the electronic means. On the economy part, our economy is quite diversified, although 70% of Tanzanians are in the agriculture sector. But we have seen growth in the past 5 years in the telecom, tourism, mining, construction, and also itself the agriculture sector. When we look at the access to entry, so Tanzania, we have Tanzania Investment Center, which is a one-stop shop for investors who will want to come and invest in Tanzania. So investors, when they access that site, they actually get information, and they also get assistance if they will need to lease land or any other requirement that they may require if they want to invest in Tanzania. On the infrastructure and project side, so we're currently running a couple of infrastructures that we are expecting to reap the benefits in the coming few years. The standard gauge, which is actually connecting Tanzania to other neighboring countries. For those who don't know, Tanzania is located at a place where there are actually 6 landlocked countries where we supply to them. We're also building the Julius Nyerere hydropower plant, which when it's completed, it will be the biggest hydropower plant in East Africa. We're also having the East Africa crude oil pipeline project, which will start next year. The liquefied natural gas, which is expected to start in 2022. And we are currently expanding our national port, which is the Dar es Salaam port, and also building road network around the country to help with different activities. On the agriculture side, we have seen growth in mainly the cash crop area, where we've seen growth in cashew, tobacco, cotton, sisal, coffee, clove, and other agricultural products. And these trades are now currently done through the Tanzania Mercantile Exchange, which is a very fair way for different business people to actually conduct their trades there. We also seen growth in fish and fish fillet area, where in the past 4 years, we have seen almost 82% growth in this area. So it's quite a good area for investment currently. We have seen growth in horticulture, and also we are currently seeing opportunity in wheat, whereby as a country, we import almost $100 million worth of wheat annually, which is actually almost the same as our budget for agriculture department or agriculture ministry. So it's a huge amount, and we have arable land in our country. So if investors that can come and invest in this space, it's a very good space. Plus there is already market in Tanzania. We have also seen growth in the tourism sector. Before COVID happened, actually tourism was the #1 generator of foreign exchange within the country. And we have seen growth in areas like Serengeti, Zanzibar, the Mount Kilimanjaro, where now we are working on building the cable car project at Mount Kilimanjaro, and also the Ngorongoro crater. There's also some huge opportunities on the mining area, where, as I said earlier, it's actually one of the most growing mine sectors within the country. But we are also known for, we are known for gold, diamond, and tanzanite, but there are also other minerals and precious gems that they haven't really been explored, as I mentioned in my presentation. So we can come and occupy that space over there. On the manufacturing, currently the government is running a strategy of making sure that most of the investors actually prepare or have industries within the country. So there are a lot of subsidizing when it comes to taxes and duties and other payments that are related to manufacturing that are currently subsidized. I think investors, if they go through the Tanzania Investment Center, they'll have all this information and how much it's now easy to actually assemble a plant in Tanzania. If we look at the construction area, so the government have been doing a lot of constructions lately, and it's a place that they are also calling the private sector to participate in it. So there is also huge opportunities over there for investors who will be interested on the construction sector. That's it from Tanzania. Thank you.
Thank you so much, Sia. Will be the team from Ghana are going to be chatting to us next. Just checking if Kofi
I'm
and
on mute. I'm on mute. I think. Yeah, sorry. Okay. Yeah, so basically, so as far as Ghana is concerned, sorry, there'll be a few noises coming from my kids and stuff, but it is fine. So as far as Ghana is concerned, I think that we just wanted to focus on the current macroeconomic position. And we'll probably look at the currency because we feel that is probably the most important aspect of any investment in the country, how protected your capital is. In terms of exchange regime, there are no capital controls. Sorry, this. I think my son is doing his multiplication at the same time as this. Sorry, cool. So it's a free exchange market. The only limitations are probably in derivatives where swaps with foreign entities have to be a minimum of 3 months and swaps with local entities have to be a minimum of 2 weeks and forwards in addition. But you can access forwards, you can access swap curves all the way out to maybe 2 years. Interest curve is relatively bumpy. Short end being 91-day T-bill is around 13%. The longest end being approximately 20 years is around 21.5. We do see a lot of foreign direct investment, foreign portfolio investor interest in Ghana, and that started just as Ghana discovered oil. In terms of macroeconomic position today, as a result of COVID, growth has been revived from 6.8, which was relatively healthy, and we were in that range bound for the last 2 years, which was an actual drop from previous years where it was double digits. But of course, we've had some pain in the form of we've been through an IMF program, we've had to clean up our banking sector, and we've tried to regroup the economy. So we came from a twin deficit position, and well, it was even a tri-deficit because the banking sector also had a problem, but that got cleaned out. In terms of balance of payments, we're in a better position now. If you look at import cover, we're sitting at about maybe 4.3 months, and that's about $9.2 billion. And during the peak of the COVID, I think Ghana was one of the first countries to go to the IMF and were able to secure a $1 billion facility, which created a buffer for the currency. At the same time, Ghana also went to the Fed, and I think they repoed some of the mineral royalties to receive a $1 billion facility from the Fed as well to just shore up the reserves just in case there were sell-offs, prompted mainly by foreign investors who have more liquid capital positions in the country. And so generally, in terms of Bank of Ghana activity, they tend to intervene mostly. They're the major supplier of Forex in the market. Main exports in the economy are gold, cocoa, and oil. Oil, we just became a net exporter of oil. And so that's definitely helped us stand in our ability to weather the COVID storm. We didn't see major sell-offs. We actually even saw yields come down just based on the monetary policy response by the central bank when the COVID started. And I think that there was definitely a skew in the fiscus from consolidation to more poverty alleviation and socioeconomic care. That meant that the government had to actually go away from the deficit which they were targeting, which is around 4%. And now we're looking at a deficit of around 11.2% of our GDP. That will have to be tapered. And of course, there will be actions around probably the taxing and the collection of taxes just to be able to shore that up. So I think if anybody's looking at any potential risks and changes, it's probably around that side of the fence. In terms of foreign direct investment into Ghana, the process is quite straightforward. What you need to do is actually go into the GIPC, Ghana Investment Promotion Center. And what you have to register with the Registrar General. Minimum capital for a foreign entity is about $500,000. And if you're doing a JV with a local entity, it's about $200,000. And in terms of if you want to bring in more expatriates as a function of your capital investment, it's probably as a quota system. And the numbers range from, I think it was 50,000 to 250,000. Some of the numbers here, I think are outdated, but I think I'll send the current numbers after the presentation. And I think on that, we can move on to the next slide, just to look at the economy and what it's been doing. Cool. So this is essentially just a heat map, and most people think in USD, but we think in GHS. So whatever you're expecting is inverse. So look at it in terms of your capital when it's here. So green would be good for you, and red would be bad for you. And what has happened is that historically, you find that from 2010, since the discovery of oil, we've had a few. The currency has been relatively volatile. So you've had years where oil prices were going up. Meanwhile, we're oil importers and gold prices were going down. And I think gold prices were going down when QE started in the States. As there was a threat that yields could go up in America, gold being an asset that does not earn a yield, automatically people started selling that off and hoping that the yields would improve in the US. So just by virtue of our exposure to foreign investors, you find that everything that happens in the world, there's some kind of backlash here. So even when there's a sell-off in Argentina, just because portfolio investors want to recalibrate their portfolios in the frontier markets, you would find that it would affect us as well. So you find that things start getting a little bit better post 2015 after we entered the IMF program. And what you tend to find is that our cycle is that in January, the year opens, we are a heavily import-driven economy. And so you see a lot of depreciation in the first half of the year. Somewhere towards around September, that's where our cocoa syndication flows come in. And that's approximately $1.3 to $1.8 billion coming in. And that usually you see the currency sharply fall, because of course people would have been overbought in USD and would have been projecting that it was probably going to get worse, and foreign investors speculate quite strongly. And so we had a lot of noise in those years. So we entered into the IMF program, and post that the trend changes slightly, where you seem to find an easing in the March period, which is related to when we go into the Eurobond markets to issue our Eurobonds. And then you'd find that the rest of the year would be relatively quiet because the September would cool it off as well. Last year, there was a little bit of noise where we were going to the Eurobond markets, and I think the market sentiment was slightly risk off, and government was actually projecting to make a lot of infrastructural expenditure. Foreign investors yet again speculated. The central bank was relatively slow to react, and as a result, we saw a lot of heat in the February period. And then we had the Eurobond results, which turned out that the Eurobond had been oversubscribed by 11 times fold, and the government being disciplined, actually, they were targeting 3 billion. The subscription was around $22 billion. I think personally I would have taken the lot, but they did not, which shows a lot of discipline in the current government. And since then, I think that the trust around the government has kind of eased. And so you see that the rest of the heat map seems to ease all the way through. What you would have expected is that in January, you would have expected the red again because companies open up. And of course, there should be pressure. But then this year, because of the COVID, of course, there were travel bans from the people who were not going to China. Chinese were not coming here. I think business slowed down a bit, and we import quite a bit from China. Ghana is heavily import driven. I mean, toothpicks are imported. Pretty much every single thing is imported. Under the lockdown, there is a strong drive for import substitution. There is a definite drive to try and create capacity in the local space, improve the labor skill sets, just so that we can fend for ourselves in the case that we are ostracized from the world again. So the pandemic, I think, has forced the right kind of behavior. We did see a bit of pressure in March, but that was still yet again around the Eurobond issuance period. And this was also 5.5 times oversubscribed. Yep, oversubscribed. And yeah, and since then we've been relatively, we've more or less even appreciated for the year. Actually, no, depreciation is in single digits for the year. And I think that for the rest of the year, we're going to be broadly stable. So the currency has probably shed about 1.3% year to date. And the previous year was around 13%. So I think that in terms of balance of payment, we've got that right. So the main focus now is probably going to be related to the fiscus and how we manage that. The fiscus creates a problem for the private sector in that if the government borrows at 21% and 20% for 5 years, whereas a corporate's supposed to borrow. So it ends up crowding out the private sector quite a bit. So it's very difficult for local companies to be able to raise cheap capital to be able to compete effectively in the market. So you find that from a foreign investor perspective, there's usually an advantage in terms of cost of capital. The return is relatively good, depending on the sector that you look at. In the services sector, margins are very, very decent. And I think that in terms of the return in USD terms, even if you were to compare to a Eurobond, I think that the positive carry in GHS is still about 6%. So you could earn about 12% real yield in Ghana on even risk-free if you were to manage your risk right and time your entry and exit strategies properly. And I think that I'll close off for now and I'll leave everything else to the questions. Thank you very much.
Thank you so much, Kofi. I'm not sure if Richard was going to join us, but let's move on to the team from Namibia. We've got Sepo Hambo.
Hello, can everyone hear me?
Yes.
Okay, so I will keep my presentation relatively brief and happy to discuss any detailed questions during the Q&A session. Essentially, Namibia is a boutique investment destination and is looking for foreign direct investment in value addition and beneficiation opportunities in natural resources, in diamonds, copper, zinc, manufacturing, agro-processing. It offers a sound democratic governance architecture, and that is a multi-party democracy country that has elections held regularly, and it's very, very stable. The Namibian currency is pegged to the South African rand. Just apologies for that. On the slide, I see GDP there's a 12.37 billion. That is a real GDP number, therefore adjusted for inflation, nominal GDP at 26 billion. It's a relatively large country. In terms of area covered, with a small population of 2.4 as stated there. So it's actually the second least densely populated country in the world after Mongolia. However, having said that, it does have international memberships to different trade areas, such as the SACU and, SADC, the Southern African Development Community, and has also ratified the Africa Free Trade Continental Agreement. So being based in Namibia does give companies operating for Namibia access to larger markets and not just to the 2.4 million domestic population. It's got a very strong road network and a strong rail network. And the neighboring countries are Angola, South Africa, Botswana, Zambia, and Zimbabwe, with Namibia being located on the southwest coast of Africa. It also acts, we also have the port in a town called Walvis Bay, which creates access for landlocked countries such as Zambia, Zimbabwe, Botswana. And I think there is a preference for the use of the Namibian port due to the investment in technology to clear goods relatively quickly. Economic-wise, sorry, that graph seems to be a bit small. GDP is primarily driven by primary sectors in mining, agriculture. There's also a big fishing sector, and which then creates secondary industries where there's the processing of fish. With diamonds, it's very elementary in terms of the polishing that is done, but for the more upgrade, very detailed 3Cs type polishing, those are done outside of the country. So what you'll see on the imports and export side is some commodities stay in both on exports and exports, and diamonds would be one of those, because when they are cut and polished to gem type stones, they are then that happens outside of the country, and then it's an export. And if it comes back to be used by Namibian jewelers, then it comes back as an import because value has been added to that product. There's also a big industry in terms of beef exports. Namibia has arrangements with the EU and China, and recently the USA, to export Namibian beef to those countries. So meat processing is also a big industry for Namibia. Real estate also in the past was doing quite well, but with construction, you know, we kind of reached a point where housing prices and property prices had climbed quite high. And now with the economy cooling off, you're finding that there's been quite a sharp correction in real estate prices and construction. So really a buyer's market at present. Namibian diamonds as of interest are alluvial diamonds, which means that Namibian diamonds are all gem grade diamonds, which means they're very, very sought after internationally and generally fetch higher prices per carat than diamonds from other countries. In terms of ease of doing business, Namibia ranks 94th in the World Economic Forum Competitiveness Report. I think that kind of covers high-level information on Namibia. Happy to take further questions during the Q&A.
Thank you so much. We're going to hand over to the team in Nigeria now. Thank you.
Thank you and good afternoon, everyone. My name is Ngove. I work with RMB Nigeria. I head the coverage team. Coverage essentially is relationship management. In Nigeria, RMB is a full-fledged investment bank, so we're a merchant bank with a merchant banking license. And what that means is that we're able to bank corporates and institutions. We are not a retail bank. So the brand in Nigeria is only RMB. We do not come in with the FNB brand. Next slide, please. So to give a bit of an overview about Nigeria, it's essentially a large regional player in West Africa. We account for more than half of the West African population, with an estimated 202 million Nigerians. We have a very youthful population, the demographics skewed to the below 18 years. We are multi-ethnic and culturally diverse. And as anyone who's been to Nigeria, you would know that. We have an abundance of natural resources. And so Nigeria is Africa's biggest oil exporter. And for a number of years, that has really been the focus for the country in terms of external foreign exchange generation. But we do also have the largest natural gas reserves on the continent. The economy of Nigeria is largely middle income. I think it's classified as mixed economy and emerging market with an expanding manufacturing, financial services, communications, technology and entertainment sectors. We are ranked the 27th largest economy in the world in terms of nominal GDP. And our manufacturing base provides and produces a large proportion of goods and services for the West African subcontinent. In spite of this, Nigeria is still quite largely import dependent. All revenues contribute more than 2/3 of state revenue. And as a result, the economy has been quite battered by the COVID pandemic. And we've faced twin shocks of slowing demand for oil, and also with the price wars between Russia and Saudi, where we saw oil price coming down to historic lows. As a result, the government very quickly, with the onset of the pandemic, approached the IMF for support, and the IMF approved a $3.4 billion stimulus package. In addition to that, the government itself introduced a $6 billion stimulus package with focus areas on certain industries that the government feels are really the growth areas for the economy or are the areas that are most in need. And these areas are pharmaceuticals and healthcare, logistics, real estate, natural gas projects, and mining. Real sector growth is a key pillar for the government, with priority given to food sufficiency, backward integration, import substitution, and value addition. With regards to COVID, the country has essentially been in a lockdown mode for the last 3 months. We spent the first month of that on full lockdown, and in the last 2 months, we've had partial lifting of the lockdown. And what that caused was, as you can see from the metrics, we have seen a contraction in GDP. And it is estimated that we will end 2020 with a negative -1.5%. It's important to note that when we put that against the global GDP growth projections, we are slightly ahead, but it is still quite negative. Oil prices have somewhat rebounded, and so the economy is doing better than it was a few months ago, but it's still at levels that we consider quite low and are creating a huge deficit in the country's budgets. Inflation remains a big concern for us. We're currently trending around 13%. And exchange rates has been a big issue. And for many people who want to come into Nigeria, this is a big question mark. So to summarize very quickly, since the start of the year, we've seen the official market devalue by circa 9%. And that's really because a lot of the foreign exchange in the country either comes from the central bank through foreign exchange earnings that the government accrues, largely from oil. We've already spoken about what the issues with oil are. And secondly, from foreign portfolio investors who invest in equities or government securities. A number of policies that came into play late last year sort of created a risk-off scenario. And with the pandemic as well, there's been reticence with a lot of the FPIs. And so we found very little new money coming into the system and existing money waiting for foreign exchange to be able to exit. The government is paying very strong attention to this. There's a strong move to unify the exchange rates. We have an official market and an unofficial market, which the bank does not trade in, but they do, the markets do exist. And so there is a push to try to make sure that any arbitrage between the two markets is eliminated by bringing rates down. And a number of things have happened in the last few days. So we continue to be hopeful that we will see stability in the exchange rates and that the market will gradually pick up with investments coming in. The government is now very focused on encouraging FDIs. We have an investment promotion council. We will provide further details, obviously, to the team at Africa Scotland to circulate, but there are a number of attractive options for new investors or existing investors to explore. It's important for me to note that Nigeria does have strict exchange controls. So please, if there's any money coming in, we strongly advise that we have a chat. The team in South Africa are aware of some of these exchange controls and are able to guide anybody who's coming in. Or, as I said earlier, we'll provide an update to this slides that also provides our contact details for the team in Nigeria, and we're happy to speak and to support. There's also widely available information online as to the exchange controls and the guidelines and policies. Next slide, please. Okay, so essentially the bank in Nigeria is structured around the products that we're able to offer. So we have a big, a vibrant corporate and investment banking team that offer a wide range of services. We've also got an amazing global markets team, if I say so myself, who provide a number of risk management products, and we've been quite active in providing non-deliverable forwards to our clients and helping them to hedge their FX exposures. We've also got a stockbroking license, and we've got a research team that sits within the stockbroking business that provides us with some really good insight into industries and companies. And it really has helped us to develop very strong relationships with our counterparties outside and within Nigeria. We have maintained a credit rating as shown in the slide, and we continue to work with the rating agencies and with our regulators to ensure that our license is preserved and we continue to improve. We provide holistic advisory and funding solutions across a broad range of industries, and these are sort of listed to the right or to the left, depending on how you're looking at it. But we essentially cover the whole gamut. So power and infrastructure, fast-moving consumer goods, logistics, oil and gas. And we're really trying to work with the Nigerian government to impact and grow the real sector. Obviously, priority has been given to projects that encourage food sufficiency, backward integration, import substitution, and value addition. The last thing I'll talk about is security. That's usually a concern. And yes, Nigeria has had some security challenges, and a lot of insecurity currently in certain areas in the northeastern part of Nigeria with Islamic militants. And between the Nigerian and the Chadian armies, there have been several attempts to push them back and eliminate. We also have had some instability in the south, particularly with what we call the Niger Delta militants who've been agitating for resource control. But in the last few years, it's been quite quiet. There have been occasional flashpoints, but it has remained quite quiet. We do advise clients to take advice of security. There's also security information about what to do and how to do business in Nigeria. But my advice obviously would be to find a good counterparty who can provide advice, and that would be a bank or a law firm to guide you. But Nigeria is certainly open for investment, and we thank you very much for giving us the opportunity to speak this afternoon.
Thank you so much, Ngova. Next up, we're going to hear from our partners at Trade Law Chambers.
Thank you, Nicola, and also thank you to all the presenters from the FNB. I've been keeping an eye on the attrition rate of the other participants, and I'm happy to say that it's not high. I know it's been pretty long presentation thus far, so I'll try and keep it brief and just to limit some of my comments on some of the countries to a few high-level items. So firstly, also for the people who are not from the continent, let's start with South Africa, and maybe to say that, despite the current context that we have within South Africa, we're still an investment-friendly environment, and we're one of the most open economies in the world. So that really facilitates people wanting to do business with South Africa, and also in order to try and get into the rest of the continent. We've got a very facilitating regulatory environment, and of course we've got an excellent rule of law, at least still currently holding up. And we've got very well developed infrastructure, which is also a key consideration for numerous businesses, especially those trading in goods. South Africa is also on the forefront of driving regional and continental integration. And because of that drive, they make sure that the kind of key sectors that they look after are facilitated within these regional and continental trading arrangements. So it's often for foreigners a preference to get into the African market via South Africa, and therefore South Africa still is one of the main springboards into the rest of Africa. Nicola, if I can have the next slide, please. Then on the slide, we've got just a few thoughts on Botswana and Namibia. As was said, I think previously also, Botswana is one of the top open economies in Africa. It really has an investment and trade-friendly environment. There are some businesses that are reserved for Botswana nationals, but it's not really significant, so it's not really something that you need to worry about. The key sectors which has a lot of opportunity still remains mining, tourism, and agriculture, and also to a certain extent financial services. And Botswana has done really well with their Export Development and Investment Authority, which is a one-stop shop. So it's very easy for investors, should they have any queries as to how it is that they want to get into the market, to just go to this one-stop shop and get everything set up from company incorporations to intellectual property protection, tax registration, whatever it is that you need, they are able to assist you with that. On the Namibian front, Namibia has a similar legal landscape as South Africa. So it's really easy to expand from South Africa into the Namibian market. They also have robust foreign investment protection against nationalization. And I think an important contributor or thing that we need to bear in mind is for both Botswana and Namibia, South Africa still is the biggest trading partner. So anyone wanting to invest in those markets is possibly going to be that you're going to trade from South Africa with those two countries. But it's also, of course, we're going to be the biggest off-taker of any of the products or services being rendered in those particular markets. And then another key consideration is our SACU membership that Botswana, Namibia, and of course South Africa shares. So that is key in understanding the trading dynamics, whether it's trading goods or services, as we all negotiate those kind of arrangements as a grouping, and South Africa having probably the largest or loudest voice within that grouping. South Africa will champion their industries, and you're likely to align with what the South Africans will say on that front, even though it's a negotiated outcome. Next slide, please, Nicola. On Mozambique, sticking with the theme of SACU, there's ongoing discussions to include Mozambique within the SACU fold, which would allow for at least duty-free goods going into and out of the country. But until that is finalized, Mozambique benefits from what we call least developed country access to South Africa. And it has numerous free trade agreements with African countries, including with the UK and the EU. So it is a very nice facilitatory trading environment to get into. Of course, Portuguese is something that is of a consideration. The economy is mostly open to foreign investment, save for the mining sector. There's certain conditions that people have to comply with. And then there's a little bit of a caveat in investment friendliness, and that is in the sense of services. So any services provider wanting to go to the Mozambican market, the Mozambican government has made very limited commitments on services trade, meaning they've got very little regulation that champions foreigners investing in the services market. So it's only very limited commitments that they've made that legally allows foreigners to invest in financial services, and also in only certain limited financial services that's being invested into. And then, of course, they've got very nice guarantees in terms of investment protection from many, many countries, including South Africa and the UK. So investments either from South Africa or then from the UK, they will not be open to expropriation. And Nicola, the next slide, please. Within Kenya and Zambia, the first thing is in terms of Kenya, it's also one of the biggest economies within sub-Saharan Africa, and it's generally investment friendly. Again, there's the same kind of caveat that we had with Mozambique in terms of services. So if you're coming from the UK and you're trying to establish a service provider within Kenya, it's much more restrictive than it would be if you came from any regional grouping. So whether that's from COMESA or the East African Community, or when we get to the final version of the African Continental Free Trade Agreement, of course, any country really from the continent, it will be much easier for yourself to establish yourself via the continent in order to get into Kenya than just getting there from the UK, as an example. Kenya does require certain minimum Kenyan co-ownership for financial services providers, telecommunications companies, mining, engineering, architecture, and some other listed companies on the exchange. So that's also a consideration that people have to take into account. In terms of Zambia, Zambia is generally also quite open, especially in respect to business services, construction services, and health and tourism services. It is opening up more and more to the region, especially through SADC and the tripartite free trade agreement between the COMESA, SADC, and the East African Community, and then, of course, the continental-wide free trade agreement that we have. Its regulatory environment, though, is still quite slow to adapt to ambitions. However, our experience has been such that even though the regulatory environment might not facilitate the ambitions, once you engage with the regulators, they are quite keen to try and accommodate you. So that's a very positive indication that's coming out of that particular market. Nicola, if I can have the last slide, please. And then getting into Ghana and Nigeria, Ghana has a robust and facilitating regulatory environment. It does maintain capital and ownership restrictions on a few services, business services, and they haven't made a lot of commitments on trade and services. So the same thing I mentioned in respect to Kenya, where it's very difficult to come in as someone who's not from the continent, where it's more easy to try and use a regional arrangement in order to provide your services within that market. The Ghana Investment Promotion Center Act allows for foreign participation with limited local ownership requirements. And the Ghana Investment Promotion Center has been a key driver, kind of like what we had with the Botswana one-stop investment shop, specifically within the tourism sector. And in terms of Nigeria, Nigeria has unfortunately a complex matrix of legislation, so it's not easy to navigate. So it's most definitely, I think, a key consideration to identify partners that you can trust and has a lot of expertise that's on the ground. And I think we've seen a mixed bag in Nigeria, and I think that mixed bag really depends on the regulatory environment. So although they've made very limited commitments, we've seen that where it's open, those kind of industries thrive. However, where it doesn't seem to be the case that it's so facilitatory towards foreigners investing or trading within the market, a lot of guys have gone in there, and unfortunately, after years or trading experience, have had to withdraw from that particular market because it's not a simple market to do business in, and government, as all governments do, they reserve this policy space that they have in order to achieve whatever policy objective it is they want to go after. And that is often the case. And this could be a key consideration that you need to take into consideration should you want to go and invest in that market. Nicola, that's all from my side. I'm happy to take any questions if any of the participants have any.
Great. Thank you so much, Rion. We're now going to move into the Q&A session. I don't know, John, whether you want to try and connect again, if there's some content you'd still like to share with the audience today. Otherwise, we can connect afterwards. Just let us know. Okay, so if anyone has any questions, I can see that there's something jumping up in the Q&A box that has been answered by Kofi. Okay. Does anyone else have any questions? I know we are at 3:30. So if anyone needs to jump off, then by all means, you can do that. But I do have a couple of questions that were submitted prior. So I will, if the panelists are happy to stay online, I will just go through those quickly. So this is a question around Nigeria. What types of local experts should one consult prior to investing in Nigeria?
Neil, I can take that question.
Thank you, Neil.
As Rihanna's pointed out, it's especially in more complicated market like Nigeria, it's key to involve local experts, especially local legal experts, that advise you on domestic legal requirements for investment. Excuse me, just stopping my video. Yeah, just to obtain advice on domestic requirements for investment, such as minimum ownership or capital requirements, but also on the various investment incentives offered by investment promotion centers or offices in these countries, especially Nigeria. As we've heard from the various other speakers, you can obtain very valuable advice from local financial experts or banks on the economic risks, to get help with advice on forex, liquidity shortages, and very importantly, also on exchange controls. Finally, especially for countries where legal enforcement is more of a challenge, or where there are problems with political stability, it's also advisable to involve political risks experts to obtain more information on the actual situation on the ground.
Great. Thank you, Neil. If the panelists would like to activate their videos, then we can see you. Ngova, do you have anything to add to Neil's commentary there?
I think he's covered a lot of it. I just would like to suggest that they also contact chambers of commerce. So there is a very active Nigeria British Chamber of Commerce that provides advice as well. And of course, contact RMB.
Yes, indeed. Okay, I've got another question here. It's around, all right, what stops countries from imposing further local ownership restrictions after you have invested in their market? Don't know if anyone would like to take that one.
Nick, I can comment on that question as well.
Great, thanks, Neil.
Rian also alluded to countries' international or multilateral commitments. So in terms of trade and services, countries make commitments at the WTO, the World Trade Organization, where they undertake not to impose further restrictions than what they've committed to in terms of the GATS negotiations. So it's important to look at that before you invest in a specific services sector in a certain country. We've seen examples in the past where a major South African bank invested in a Southern African neighboring country, and where they had to withdraw after a short period of time because the domestic regulations were changed. So it's important to look at the domestic legislation requirements, but it's also important to look at the multilateral commitments of the countries in terms of the WTO.
Great, thanks, Neil. I don't know if any of the other panelists would like to add to Neil's comment.
Yeah, so I think from our side, I think it's just we're too exposed to other foreign entities to knee-jerk as such. So anything deemed as capital control or non-pro-business, you would find that you'd have a huge economic lash. And we've also got agreements with the World Bank, with the IMF to ensure that we promote investments and protect people's investments as such. And so I think we're too connected to the global village to do anything that sabotages the global concern. And we're trying to make Ghana one of the investment hubs for West Africa. And as a result, I think that we're going to make it sure that people can come out with as little shock as possible through the experience in Ghana. And that's my 2 cents.
Thank you, Kofi. Anyone else like to add to that?
Sorry, if I can add from a Mozambican perspective, the regulation actually protects the investor in a sense that any new regulation does not override the previous, it's not necessarily the proper term, but any new regulation does not take place over what is existing. So it does not have a retroactive effect. So if you have signed an agreement, came into the country under a certain umbrella of regulations, if a new one comes up, it does not override the previous one.
Right, thank you, Marta. Anyone else before we move on to the next question?
Yes, Nicola, and I think maybe just as a sort of a general statement from a Botswana perspective, it's notwithstanding that regulation does change. I mean, it is part and parcel of government's political agenda as well as for an economic standpoint. But it's also very important to note that many African countries, particularly in sub-Saharan Africa, we do have an investment in trade arms that exist in our countries. And a big part of their role is to help companies that have come into the market sort of navigate any sort of changes in the legislature that may adversely affect them. So there is a lot of consultation, there is a lot of engagement, and I think one must be very open-minded. The governments are not intentional in their design or intent to sort of make doing business in our countries difficult. There's actually infrastructure, government entities like the Botswana Investment and Trade Hub who are specifically designated and designed to support companies as they enter into our markets and make it easier for them to navigate the landscapes. So that's it.
Great, thank you, Baila. Okay, so I've got a question here around Kenya. Investing into Kenya, minimum ownership. What is the minimum percentage co-ownership if I want to provide financial services?
Thanks, Nicola. I don't know whether Neil or Neil wanted to take that.
Go ahead.
First.
Welcome to
Yeah. All right, cool. I think as was intimated earlier on the legal overview, yes, financial services is one of the areas that are subject to this ownership caps. At the moment, I would say it's not less than 30% of ownership in the financial services sector. Neil, whether you wanted to add anything to that?
Thank you, John. Yes, there are various or varying local ownership requirements depending on the sector or the type of services that you want to render. But also, you know, the other important aspect you can in mind is that you often also require approval from the Reserve Bank. So you obviously also require assistance from legal experts to help you with obtaining the necessary licensing and or approvals.
Great, thank you, Neil. I think we've got time probably for one more question. Let me just see which one. Okay, here's one around Kenya, exporting to Kenya. Will the TFTA provide tariff preferences to all exports from South Africa? Are any products excluded?
Thanks, Nicola. Yeah, I can provide an answer on that question as well. Rian also, again, alluded to the fact that it is advantageous for investors setting up in South Africa because they will have access to various African countries' markets through the various trade agreements we have, one of which is a tripartite free trade agreement between COMESA, SADC and the EAC. An important thing to keep in mind is that free trade doesn't happen overnight. The TFTA, its aim is to remove all tariffs on approximately 90% of all products. But this will happen over a 5-year phase-in period. So it doesn't mean free access to the Kenyan market overnight. It will be gradually reduce the tariffs over a period of 5 years. And even then, countries that are party to the TFTA can also reserve approximately 10% of their goods as sensitive products. So those products will be excluded from tariff reductions. So especially for products such as agricultural products, agro-processed products, countries will countries such as Kenya will still be able to retain some tariff protection. So definitely we're going to see increase and improved access for South African exports, but it doesn't mean that all trade will be free.
Thank you, Neil. I'm just aware of time. I think we could spend all afternoon here, but do any of the panelists have anything else that they'd like to share with the audience today that they didn't have a chance to in their presentations, or any closing thoughts? We will be connecting anyone who's requested a connection directly. I'm just going to share our contact details quickly. So please, sorry, I'm just fiddling with Zoom as one does. So thank you so much to our panelists, to our partners, and to the audience for your time today. I think it's been an absolutely fascinating session. As I mentioned a couple of times, if you'd like to get in touch, find out more about the network, or if you'd like to get in touch directly with one of the speakers, please just drop us a line, email, socials, whatever suits you, and we'll happily make the connections. I hope you all stay safe, stay dry. In Cape Town, we've got a terrible storm. So I hope everyone stays well, and thank you again so much for your time, and take care. Bye now.
Thank you.
Thank you. Bye-bye.